So with the government shutdown, we're going to get no official data on the jobs numbers, GDP, and all the financial news that we need each day to figure out what's going on with these. So that's what we're going to talk about in today's video. Because if you're watching this video, you're most likely trying to figure out what's going on with these and the whys, and also, what should I do? The federal government is basically in shutdown until next week, so we're really going to have no data the rest of this week. And we were anticipating the jobs report, and that's the number one thing that the Federal Reserve is monitoring right now. We're supposed to have the initial jobless claims, continued claims, all the data that the Federal Reserve wanted to know. So if you're looking to buy a house right now, we're going to look at some of the numbers from where you were and where the numbers are now. If you're looking to refinance maybe, well, we're going to look at those numbers as well. So just want to show you guys where you would have been maybe a couple months ago versus where you are now. So maybe you're getting an opportunity with all this mess happening behind the scenes to lock in now. So let's get over to some of the numbers to see what the differences are. So the rate just not too long ago was about 7.25, and now we're at 6.375. So what's the difference in your payment? Well, if you go over to here, it's almost $200. There'll be a savings over time of about $70,000 in interest. So you can play with these numbers just to see how much, maybe you were looking at that house back when the rates were 7.5 or 7.75, and you're like, those payments are ridiculous. Well, now look at some of the numbers. But let's get over to those that already have closed on their home. They own the house now. And a lot of times people are saying, okay, I need the rate to be 1.5, or much lower than where it is now because I really have to eat up all those, because the savings I'm going to get is going to be eaten up by all the costs. Because remember when I bought that house, I had to pay a title fee, whichever that was like $8,000. Just so you know, when you refinance, the costs are a fraction of what they were when you bought. By refinance, they're $995. Now, if you were to refinance that mortgage with today's rates, how much would the savings be? You'd save almost $350 a month. So I'm going to come in each day and still explain to you guys what's going on with the government, what's the economic news behind the scenes. Join me back each day because we're not going to have any financial data. So if you're out there and you're flying blind, watch the 10-year Treasury, but tune into my channel because we're going to focus in on the MBSs, because this right here, this bond, this is a mortgage bond. What this does is it basically indicates what's going on with mortgage rates. If this bond price is going up, that means rates are coming down. So the bigger this goes up, the more rates are dropping. So you might say, okay, Dan, I'm just going to wait for this to just keep coming down. What might not come down? Let's say a government, they come to an agreement next week and all the markets settle back and rates go back right to where they were. You missed out on this opportunity. So we went from down here all the way up to here. All these marks through here are mortgage companies actually reducing their rates. So take advantage of these lower rates today because they might be gone tomorrow.